Julian Brigden, welcome back to F.A.C.E. How are you, Julian?
Thanks, Dale, for having me on the show. Sorry, I was on mute for a second there.
That's okay. It's great to have you back. There's a lot to talk about. I went over took a look at some of your stream and Twitter. And before we get to some of those things, I just want to introduce Julian. Julian's is up in, heaven on earth in Vail. Is it heaven on earth for you, Julian?
Well, actually, I'm in Chicago at the moment.
Oh my God, you went back to hell. All right, you're in Chicago now? I grew up there, so...
I've been splitting my time, Dale. It's the end of ski season.
Okay.
So not so much to do up in Vail at the moment.
Okay. For me, I would just hide from the heat and the humidity, but, you have a nice perspective from both places, Chicago being really a hub. I mean, that's where I learned the business. I used to run orders when they traded currencies on a chalkboard, Julian. So, goes
yeah,
back
I can relate to those days. Not quite that. I wasn't quite in the smoke signal days, Dale, but yeah, certainly early days.
So, the big question is, of course, are your expectations with consensus on the Fed for this week, Julian?
Yeah, I think so. I think my sense is I think people, you occasionally get these sort of commentary that sort of read, Powell as some sort of politician, and he's not really, but he is very concerned, I think, by the Fed's reputation, and particularly with the American people in aggregate, as opposed to any one political party. And he's concerned with this angst that you're seeing now amongst the American people around inflation. And I think he's decided to sort of gird his loins and kind of go for it. What that quite takes, we will see. I think the big thing that, Dale, that I think people continuously underestimate is this idea that it's only about inflation. This is not about inflation now. This is about slowing an economy down, which is growing above trend, that means broader, tighter financial conditions. I think the equity bulls constantly just sort of want to find a way where, inflation will come down in the second half of the year, and everything will be great, and off we go. We can rally again because the Fed won't have to hike. It's just not how it happens. It's almost impossible to tighten financial conditions, which I think we discussed last time I was on the show. There's a broad metric of things that go into financial conditions. So there's 2-year yields, sort of 10-year yields, the dollar, credit spreads, and equities. And you look at across the board, and you sort of say, we've done some sort of calculations. You say, so where do we need to be, right? If you've got to get growth back to trend, and I would dismiss the last GDP print as aberrative, dragged down as it was massively by exports, and also by some inventory.
So the strong dollar is a problem. I know I underestimated this dollar move. Is the Fed baking that into their consideration? If they continue...
look, it's just part of the mix, right? I don't think yet. The Chinese move intrigues me. Yeah, that one intrigues me. We caught it from 647, I want to say 646.
Okay, nice buy.
Yeah, that was a nice buy. We'd had a stab at how to going it a couple of times, Dale, because it just looks completely out of whack. If you look at it against the basket, and you look at it against the euro, and so we're actually, even though I'm a long-term structural dollar bear, I'm not sure.
Right.
I'm definitively not sure. If anything, this is the classic way that you move into a crisis is what we refer to as the napalm run. Okay, in the dollar.
All right. I remember Robert Duvall loved napalm.
Yes, exactly. Love the smell of napalm in the morning. Exactly.
Yeah, it reminds me of victory.
Yeah. Well, this is usually how dollar bull cycles end.
Yeah. Okay.
And it's a kind of, because a rising dollar is disinflation, it's tightening financial conditions for a bunch of countries across the world. And this is kind of how it typically ends, is you get this vicious squeeze. And it's the napalm run is when you get a risk off move, Dale, and the dollar rallies.
Yes.
Okay. Why is that a napalm run? Because it is the denominator of most of the assets that we trade. Right. So think if you're owning gold and you need it to be a store of value, right? If the denominator is rising in absolute terms, the dollar, okay, then in euro terms, gold can fall in nominal terms. In euro terms, it can be unchanged, right? That's the point. So it becomes really, really destructive because your denominator is rising as the underlying, in a risk-off environment, as that underlying asset is falling. So it just compounds the effect, right? Copper's already falling, and oh shit, the value of the dollar's going up too, so I have to sell copper even more, right? So the napalm run literally leaves you left unconstrained with a bunch of charred bodies and smoking holes.
Yeah, so
right? I mean,
people, going over
left.
Niagara Falls in a barrel, right?
Exactly. I mean, it is a total disaster. Now, the Fed has always intervened at that point, right? Has always come in, and they've either offered swap lines or whatever. And the fact is, I don't think people know this, but after 2020 was quite interesting because within a matter of weeks, the Fed did something which in, say, the global financial crisis has taken months to do, right? It offered swap lines and repo facilities to COVID. All the central banks across the world. Right. And it had never done that before. It'd taken months and months and months for it to happen. I mean, they'd offer swap lines to, the Bank of England, the SMB, and the ECB, kind of the inner circle. But you could forget, Indonesia or China or all these other guys. Well, not in 2020. And they've actually left that facility permanently open now, the repo facility. So I think the odds of a true napalm run are reduced, but we're still in that sort of risk-off dollar rallies because this is the Fed tightening, and the way this typically ends is something breaks. Could be here, could be overseas, right? Could be Japan, could be I don't think it's Europe. Could be the U.S. equity market, and then the Fed goes, "Oh." Sticks their hands up in the air, mea culpa, backs off, and that's when the dollar goes.
Isn't this already broken?
I mean,
the bond market.
I think the bond market. I think there's a decent chance
of a rally.
No, I think that there's a decent chance that the bond market is truly broken. I mean, when I look at charts, Dale, I like to look at over long time frames. I like to look at logs. Julian. Yeah, I like to look at log charts, right? Okay. So if I look at log charts for, and the sort of core of the problem has been, in the 5-year sector, in the belly of the curve. Okay. So I don't know if you let me share a chart.
Sure, I could do that. I'll stop sharing, and you go to the bottom, and there's a green button. Share screen. Got it. Beautiful.
Use Zoom all the time. There you go. So this is the log chart of 5-year yields. This goes back to 1981, so it's contained 40 years worth of bull market in treasuries.
Yeah.
Look, it's a few weeks. This is a 40-year chart. I'm not going to, hang my hat on it completely. But that looks, pretty much from 2s all the way to 10, you've broken.
Okay. It looks chaotic. First the decline and then the rebound just as
Yeah,
quickly. And the acceleration of both moves are bigger than anything you see going back to the late 70s.
correct,
So,
correct.
there's some definitely some cracks in
Yeah,
the
and I
structure
think,
and liquidity
look,
there.
short term, we've come a long way. I mean, I was noticing copper's starting to break down,
It
right?
is. Yeah.
And that gold copper ratio is not a bad metric for treasury yields. I mean, it's one that I've used for a long time. Jeff Gundlach used it. Obviously, he's
Yeah. A guru.
a guru, exactly.
Yeah. Yeah.
And so, do we get some sort of slight reset? I mean, I've actually gone long one bond market, and that's the UK. And it's not long dated. I've done short dated. I've done the short dated swaps they call Sonias, which have replaced Euro Sterling, which used to be, like your IBOR, the short end interest rate contract. And the reason there is, as I do see the consumer, they don't have the wage growth in the UK that we have here in the US. So that people, and they didn't have the degree of stimulus that we had here in the US. And
So that's a proxy for the euro pound long?
I mean, God, I'm just touching the euro.
Because, the euro's made successive new lows without the euro pound.
I know, but yes, maybe. But the trouble is with Europe, it's just so toxic, right? I mean, you can't. I mean, look, you and I talked before, and we thought, there's a decent chance that euro is making low, and then what happens? Well, Ukraine. I mean, really. So you can't really touch it at this point. You can't really touch it. I mean, I was going through stuff this morning, and you do have true stagflationary signals building in Europe. Now, whether it persists, but they're going to get hit by European manufacturing, particularly German manufacturing, is going to get hit by the lockdowns in China. They're a huge export market for Germany. They have insane price pressures. I mean, insane price pressures.
What's going to happen when either Putin cuts off gas deliveries or Europe says we're going to ban imports from Russia?
Well,
and can that happen?
Cutting off your nose to spite your face. But I sort of struggle with that one. I mean, I don't, I struggle with the logic. Would you shoot yourself in the head voluntarily unless you are truly suicidal, which I don't think these guys are? So I have to think they come up with some sort of solution that keeps things ticking over. Maybe I'm wrong. I mean, it'll depend a lot, but they've come out this morning and said they can't find a deal, right? I mean, in part, mostly because of Hungary, who said, no way, we're not going to, we're going to pay for stuff in rubles. But I think, the Austrians have said they're going to pay for stuff in rubles. So,
it seems like the whole world is kind of lining up with Russia, India, China, Brazil. And that's geopolitical, but I want to get this out of you because people are amazed that I remember what we talked about months ago. But I remember in our first interview, we were trading here in silver. And you said, I'm going to back up the truck if we get to $19. And that turned out to be a temporary low. And we had one more failing rally. Well, it looks like they're going to take out these lows now, Julian.
Great.
Would you be interested, even during the napalm run, of buying silver in the low 20s?
Yeah, if I can get it in those levels, that's the level that I would start to get. I would start to get interested. I look, it's one of those things, Dale, that I think you take a stab as it falls, right?
Yeah.
But you only take a stab because silver is, it really is the negative dollar trade, right? If you look at a long-term chart of silver, I mean, it really is profound how dollar sensitive this beast is. And let's see if I've got the chart. Yeah.
And that Euro model, Julian, I gave up on, so we're probably close to a top in the dollar. But what made me finally capitulate was we no longer had weekly divergence in
Right.
Euro. It blew out the divergence in the dollar on the daily. So, I have
You
nothing
just
to
can't
tell
touch
me.
this. You can't
Yeah,
touch this for the moment, Dale. I mean, look,
yeah,
it's just look. There's. I used to work at a shop for a while, and we had lots of geopolitical guys, and 99% of the time it was utterly irrelevant for markets. Markets would just look through what was going on, whether it was, you get a little wobble around Gulf War or the Iranian Revolution or Gulf War II or, whatever. And it would be an issue for 2 weeks and then you'd move on.
right.
Ukraine is so much bigger than anything that we've seen. I mean, throwing us back into a new Cold War, trying to deal with all the energy and the food issues that trickle out of this thing. I mean, is that 1% where geopolitics trumps absolutely bloody everything, right? And of course, none of really the geopolitical guys got it really spot on. But when I do look at silver, I think, there's arguably a bit of a trend line that came off the sort of 2002, 2003 lows. I'll show you here if you'll let me share again. Okay. Share. So if you look at this is my classic bubble, right? This is my classic bubble chart for silver. So look just how dollar sensitive it is, right? So this was a dollar high here in 2002, and silver was trading at, under $5. And this is the dollar low, and it's trading at 50, right?
Okay.
So, I mean, it is a balls to the wall short dollar trade, right?
Right.
Right here, right now, I mean, I think these are the levels that you were talking about down here. That kind of come in the sort of 22, 21 and a half kind of levels, depending on where you want to draw them. Flush out the stops, take them down to this sort of support level here, which comes in at 19 and sort of change. Maybe this trend line. I do think it. We toyed around with it here, but I still think it's got some degree of validity. So that would be the levels that I try and have the first stab. But as I said, it's the first stab only, Dale, because silver can absolutely kill you, and I'd rather pay up a little bit.
Yeah.
I'd rather buy into strength and a trend.
I hear you. You want some confirmation.
I want some confirmation.
Who needs to be the hero, right?
Right, exactly.
Prudence over valor. I noticed that you talk a lot about Cathie Wood in your stream, and she's kind of.
Sorry, I can't. I apologize to anyone who's on this.
You know what's amazing though, and it was a retweet that you put out there, where I forgot who it was saying that retail's not broken when she can attract huge crowds wherever she goes, even at a Bitcoin conference.
Oh, Tom Thornton.
She has people that want to do,
my buddy. Yeah,
people want to do selfies with her.
Yes.
So retail's still believing. I guess we have to wait for people to come with cattle prods and pitchforks before we believe retail has given up on.
Yeah, I mean, if you look at the shares,
wants to get off the ark.
And I know you could some of these go into things, but I mean, the absolute high in the shares outstanding, I think, was how many million? Is that 200,000? 0.2, whatever. Whether that's 2 million or whatever, I'm not sure. And now we're at 1.88. Right? I mean, it's fractional. There's been very little capitulation, and I think it looks like I think this setup, to be brutally honest, looks like the .com bubble to me in the US.
Yeah. I forgot who it was that set up a negative ETF on ARK.
Oh yeah, well done.
Yeah. So I think it was one of the guys from that scored on the housing crisis here.
Right.
All right. So Julian, I really enjoyed talking to you, and you do have a newsletter that people could sign up for.
Yeah, absolutely. So if you're interested, I mean, the easiest way to get hold of either our institutional product or our retail product which we do with the guys at Real Vision, is just to contact support at mi2partners.com. And then follow me on Twitter otherwise, which is Julian MI2.
Well, were you out here for the conference in San Diego?
I was, yes.
Oh, next time, let me know.
Yeah, sorry, I didn't realize that's where you didn't realize that's where you were, Dale.
Yeah,
but,
so next time, yeah, so
it was very good.
It was.
I think I scared a few people, but
yeah, I think Michelle Schneider, you scared a little bit.
Yeah, I just sort of said, everyone, you know, we're on the cusp of a rotation in the equity market of biblical proportions, and I think it's getting some, you know, headway now. I think a few people are just getting some you know, support now. But I think that over the last decade, where we've seen tech outperform and commodities and resources underperform to an almost unprecedented extent, I think over the next decade is going to flip 100% onto its head. I think that, and that's what happened during the dollar weakness of 2002 to 2008. Tech underperformed everything.
Right.
And resources outperformed.
Okay, so that's a big picture from Julian Brigden, and what a blessing to be able to have a life partner, be a partner in your business, and not get divorced. So
actually, I did get divorced, but there you go. I mean, we're still friends, so that's good. But there you go, Dale.
What a blast talking to you, Julian. Thank you for your time today, buddy.
Cheers, mate. Bye-bye.
All right, adios. So that's it today, guys. I hope you enjoyed talking to Julian. I got him to nail down a little bit that he'd take a stab at silver down there, and appreciate you guys being here today and all week. It's our mission to build up and edify traders every day, and that continues in 19 minutes. Make it 21 minutes on the morning edge. So if you haven't been in there when they do the bias charts, check it out. And I'll see everyone for Turnaround Tuesday. Good luck. Tread lightly in front of the Fed and get ready to react to the reaction instead of playing roulette. So that's a wrap, everyone. Have a great day. And don't forget, don't just count your pips, count your blessings. Thank you, Mary. To you too. See you, Ronit, Laura.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.